Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's talk about what is happening and what we can expect as usual moving forward. So all that being said and done, if you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And my membership section on YouTube is live. The link is down below in the description of the video. For $3 a month, you get access to all my posts, updates, thoughts, etc. I post options flow on Tesla as well, anything meaningful that's happening. And yeah, link is below if you're interested. But yeah, with all that being said and done, let's jump into it. Tesla on an absolutely rare occasion, up on the day, a respectable 4% as well, putting us at almost $191 per share, which is pretty damn good. Compared to the market, also pretty respectable outperformance, but to be fair, the whole market is pretty green today. And EVs in general are actually pretty green today. If I actually open up TradingView, have it organized here a little bit better. So obviously Tesla's up, we have Polestar's up, Lucid's up almost 30%. I mean, but to be fair, this stock is just, if you go to the weekly chart and you look at this thing, it's kind of like, 30%, but it's still pretty down. Rivian is up, right? So, it just seems like a bit of a rebound day for the market and especially EVs, which is, nice to see, but we'll take what we can get. So what does this mean moving forward? Let's talk about it. So first and foremost, we mentioned many times how Tesla has been just pretty much the most oversold that has arguably ever seen on the daily, right? Rivaling the other time that it was, at least recently, that it was this oversold back when Elon was selling near $100 per share, right? And we talked about how, yes, maybe you can go lower. Maybe we can go to like 177. Yes. But like the odds are just not in your favor. Like, if you're someone that's looking at the stock, and let's say you have no position and you're looking at the stock, right? And you're looking at this chart and you're looking at these indicators and you're looking at all this stuff right now. And let's say back when it was especially down at like 182-ish, give or take. I can't imagine anyone looking at this and being like, yes, I want to short it right here at 182 and buy puts or just literally short the stock right now. That just, the risk versus reward, let's just be completely honest, is really not in your favor there, at least in my opinion. So, that's something else I have to keep in mind. It's not necessarily about just, people want to just buy Tesla here. It's also just about, well, do the buyers just simply outweigh the short sellers or just the shorts in general? And I think in this kind of specific scenario, it really does. Now, there's something important that I want to talk about, probably the main focus of today's video, right? Okay, before I get that, let me just talk very general about what I see coming here. So first and foremost, right, obviously, potentially set up a little bit of a cup and handle pattern throughout the day, got a little bit of a retrace. Go ahead and make this a little bit easier to see. There we go. Beautiful, right? Had a little bit of a cup and handle pattern right here up to the, what was the high of the days, initially at about $190 per share. Had a bit of a retrace, set up a tiny little handle here, went up to about the 3.382 level. I thought it would go up to potentially the 0.5, which is around 185, 186, but close enough. And then we did, of course, a breakout, and then we had a beautiful continuation forward. And now we actually ended up breaking and closing candles above these two situations here. And now we're starting to close candles within that massive earnings gap, which is a nice thing to see. And I really think that Tesla is primed to continue moving forward, but obviously there's some caveats. First and foremost, we are going to find some resistance pretty much as we enter this massive earnings gap. First level I'll be looking at is about 195, which is this past area of support that we did bounce off of, that now of course will act as a resistance. So 195, I wouldn't be surprised if we see maybe even as early as tomorrow potentially, but ultimately that would be the first area of potential rejection. But what the main thing I'll be looking at to really truly be further, I guess, convinced, if you will, that this downtrend is arguably over, at least temporarily, is a break of this yellow line right here that we have started from all the way back up here, that we got rejected at a few times over here, continued downwards post earnings, and then of course a break above this yellow line, which again sometime potentially even, tomorrow or really just this week, anywhere between 195 to 200 is pretty much that level of resistance or area to break for the bulls to potentially consider this downtrend at least temporarily over. And if that happens to be the case, I personally do expect a move for Tesla at the very least, assuming this is nothing more than a dead cat bounce, to come back up to retest the breakdowns that we had just pretty much a couple of weeks ago, which is either going to be one of two levels. First main level will be pretty much around 210 to 215-ish, right, which is this yellow line breakdown. Above that can potentially go as high as, I think best case scenario is about the 230s. And in between those, we also have the 200 moving average on the weekly sitting at about 220. And we have the 200-day moving average sitting on the daily chart, of course, sitting at around just above $230. So those are the main levels I'll be looking at in terms of where Tesla could potentially rally as long as we do break this downtrend, which I do think we will. Now, the main thing I want to talk about is this. So this person I follow on Twitter, X, whatever, Marcus, pretty good stuff here, right? And this is going to be a pretty important pattern to talk about. This is going to be called the 3-drive pattern, right? This is something that Tesla has been doing really well. There's this little kind of post essentially I also found about it that kind of discusses it, but essentially it's a 3-drive pattern. But this, I think, I mean, this is pretty much the gist of it. He has it up here in the top left as well, right? This is kind of what it is, right? You had a massive move up and then you have a bullish 3 dive where essentially you're making a bull flag. In all honesty, it's pretty much just a very large bull flag with extra movement within it. But essentially you have a massive move to the downside and you have a massive move to the downside. That's what we had right here. And then we had a massive move up, a massive move to the downside, massive move up, massive move to the downside. So that's kind of that situation that we played out right here. And guess where we're at right now? We're at the 3, this area that we just so far bounced from, which is really nice to see, right? That is pretty important to understand. And so far it's playing out accordingly. We'll see if that actually ends up being the case or not. If this actually does play out to the typical retracement rough level, this potentially can shoot as high as almost $250-ish per share, right? So that's, you know, pretty important. Like usually the price targets with these, from what I understand, at least from my little research that I've done, is going to be you take the Fibonacci from the very start of this 3 drive pattern to the very arguable bottom, which in theory this can be, of course, the bottom. At least it should be for this pattern to take into account. And you look at roughly a profit taken level of about the 0.618-ish level on the Fibonacci, which is pretty much just above $250, which also happens to line up with pretty much the top of this trend line once again as a potential resistance. Now, will we actually get there? Is that actually going to be the play? Can we go that high? That remains to be seen. In my opinion, if we can start closing candles on the weekly above the 200 moving average at around $220 per share, I think that, you know, it definitely increases the likelihood of that substantially, at least in my opinion. But I wouldn't, you know, hold my breath for it, and I'll, you know, take it level by level first, right? And see if we can even close above those levels, and if we can even close back above these trend lines, because at the moment there is still a very real possibility this is nothing more than a dead cat bounce. We come up to these, you know, rough trend lines ish, maybe the low 200s, let's say, and then from there we find a rejection and potentially come back down to maybe double bottom, maybe make a, you know, go even lower to about 150. It's not completely out of the equation. So just, you know, Tesla's in a very, very delicate spot right now where there's some very obvious bullish patterns setting up, like for instance this one right here, but there's also some pretty bearish patterns setting up, for instance like breaking down below trend lines and pretty much every important moving average. So it's a tough one. It's a toughie. This is definitely a, you know, a very interesting and pretty delicate situation that we find ourselves in. But again, when you take into account all the indicators, at least as of right now, I think they all at the very least suggest there is going to be some short-term movement to the upside, some short-term bounce to the upside, a dead cat bounce potentially only. And I think that's essentially what we've essentially started today. Now, yesterday, not yesterday, I guess Friday and Thursday technically as well, we did set up with these 2 red candles. Ideally, this would have been a green candle. If you actually switch this to the hollow candles, it is technically a green candle. But the main thing I'm talking about, or the main reason I'm bringing that up, is because this can potentially be a bullish Harami pattern, right? This is essentially when you have a massive move down. Ideally, this is a green candle, and then it's kind of essentially an inside day candle. And then, of course, the way you kind of have confirmation on whether or not this pattern can potentially play out is actually today's candle, a beautiful, nice gap up green day candle, which is great, and that arguably should be enough confirmation to play out this pattern. Obviously there's still some caveats above us, like I said, the resistances that I'm going to be paying attention to very closely. But if this pattern is to play out, which it seems like it wants to play out based on today's price action, especially how, you know, strong of a candle we have today, that's looking pretty decent. I think the bulls can finally catch somewhat of a break, and that's going to be a very nice, you know, thing to see for that as well. So those are the main things I'm looking at. When it comes to flow, let's go ahead and look at the flow really quickly. Let's go ahead and increase this to 500K premium, where we really, let me go ahead and reset this quickly, where we're really just like, you know, looking at what are the whales doing. Like that's what we care about, right? We care about the whales. Like what are the whales doing? We don't care about, you know, 30,000. You know, there's a lot of calls coming in, by the way, a lot of calls towards the end of the day. Like look at all this green, like substantial amount of calls. But the issue is a lot of them are, you know, small. You have 31, 40K, you know, 41K, 80K, you know, that's still a lot of money, but it's not a whale. It's not like substantial, right? We want to see substantial. So let's go ahead and increase this to 500K premium. And let's see what the whales have been doing. And there were 3 golden sweeps, all 3 of them above the ask, which is very interesting to note, right? And then we have some unusual calls opening up right here. So let's talk about those really quickly as to what happened. By the way, if you're interested, this is Cheddar Flow. I have a link down below in the description as well. You can get 25% off on a multi-month plan. So you can have this for yourself and see options flow, which is really, really cool to see. But the thing to note here is the fact that we have 3 golden tapes essentially hitting the tape, calls hitting the tape. The very beginning, pretty much as the market opened, we had a 390 strike call above the ask showing urgency for 1.1 million. Not bad. Another one here, 400 strike, 400 call, also above the ask. Also came in pretty much at 10 in the morning today. 2.4 million right above that. Another 2.4 million, 300 strike, call, ask. right? Then another one over here, also above the ask, and it's a 1.3 million as well, 200 strike. So we have a lot of calls coming in. Now, granted, these major ones are fairly safe, especially the 400 and 390 strike. They're 1 to 2 years out, so there are leaps. But again, when you're playing with this much money, or maybe playing with this much money, and you're entering above the ask, which again shows urgency. Remember the one I talked about on Friday? That pretty much the last couple minutes throughout the until market close on Friday, some whale entered a kind of similar looking position, just with more money. It was like 6 million or something. Same kind of idea, right? It's above the ask. It's showing urgency. It's showing that these whales, they want to enter this position right now. They don't want to wait. They don't want to waste any time. They want to end right this very moment, right? Same thing happened over here. Again, also same concept, but this one is a little bit shorter time frame. This is only for June, 200 call. I mean, it's not super far out strike, right? It's not too much farther above. It's like maybe another 5% or so. But nonetheless, 1.3 million sweep above the ask. I like to see above the ask. It shows urgency. That's nice to see. We even have a bit more over here, right? For instance, we have 2 calls that entered over here, both 220 strikes at the ask. Still good though, but 1 million and 3.2 million. But they are for pretty much the end of the year of this year, so November 15th. So some big calls are hitting the tape, man. The bulls and the whale bulls, if you will, they're stepping in. They're looking like they're ready to party, and they're thinking that Tesla has bottomed. Now, if I open up the filter and I open up the bid section here, this is going to start showing me potentially sold options, right? And then there are some, potentially bearish-ish, if you will, sold options. For instance, over here, we have a highly unusual 1.6 million premium call sell for only February 9th. So it's not that far out, but for 195. So this whale is either thinking we're not going too far above February 9th, pretty much by the end of next week, or they're very okay to sell, their shares at this price while just taking in that premium as well. So, who knows what the, intent behind this is. That's the thing with options. You never really truly know the intent behind this, because for all we know, they bought with maybe a sold put at like 185, and now they're just reselling it and pretty much playing the wheel strategy. And now look at that, they're just going to be walking away with substantial premium pretty much regardless of what happens. And especially if they sell, they also get that profit from the shares. So you don't know the full intention behind what this from what this was. But if I ever see sold options, for the most part, it's usually been sold puts, essentially saying that people really believe Tesla is going to be basing around these 180s, if you will. And so far that happens to be the case. So we'll see. But as you know, I'm sure this week is a pretty big week. A lot of earnings being reported. Amazon, Google, Apple. There's probably a few more I'm forgetting that it's a big week for earnings, right? I think Facebook or Meta or whatever is reporting as well this coming week. So there's a lot of Microsoft, a lot of big tech is reporting this week. So that's going to be a pretty wild week. And then we have FOMC on Wednesday, though I don't think FOMC will be a big deal because the PCE came in on, what was it, last Friday, I think it was, or Thursday, came in at expectations, if not even slightly lower. So I think the FOMC this week is going to be not a big deal. I think it's going to be potentially fairly dovish even. I wouldn't put too much weight on it. I think the one in March is the one that might be a little more interesting. So we'll see how that plays out. But all in all, that is what I'm seeing. Ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. And as usual, if you're interested, the link is down below for my membership section on YouTube. Just $3 a month. Very reasonable price, at least in my opinion. But yeah, thanks for watching. And as usual, I'll see you tomorrow. Peace.